What's good? Welcome back to my YouTube channel. On this video I did a trade review on EURUSD and AUDUSD using ICT setup. So I tried to simplify ICT setup to the barest minimum so that you guys can literally get your head around this concept. A lot of people complicate ICT concept, but on this video I'm going to show you how I took a trade on EURUSD with AUDUSD on the 29th of March 2023. I do most of my analysis and I go on live calls most of the time when I see a setup. So for those of you that are yet to join my Telegram channel, check the description and you would see a link to my Telegram channel. Click to join to get instant updates on trades like this. So the video is basically not of the best quality because I literally used Telegram to record this video and bring it here to YouTube. The quality has literally dropped. So basically it's not about the quality but the content of the video you're going to get. Apologies for that. Remember, I'm just starting out my YouTube channel, so you should bear with me.
So this is a quick review on AUDUSD and EURUSD. You get me? So I'm just going to review this trade. It's just beautiful, like that beautiful bread and butter setup. Just more like a textbook type of entry and one shot, one kills kind of stuff. You get me? So it's a very pretty one. Remember, I posted something on the group and I want to emphasize on that. I said, for me, the most important thing I keep simple is where I expect my setups to form/develop. This is an important thing, like which levels of PD arrays, premium discount arrays, price delivery arrays will your best setup form. Now it's two things: the level which this setup forms and the setups themselves. You understand me? The level with which these setups form and the setup themselves. It's more like you are traveling, you're a traveler, and let's say you want to travel from here to Lagos. You can't just stand anywhere or you can't just break someone's car, anybody's car, and say, okay, I want to get in, I want to hop in. No. You know the particular place that you go to stand, or you know the particular place that you're going to go and board your ticket, or for either a flight or if you're using the road. Anyhow, you know the particular place, particular spot that you're going to go to in order for you to book that particular ticket. And when you go to book that particular ticket, you know what you're looking for, you know where you're going to, you know your setup, which is Lagos. Let's say you've arrived at the level, you've arrived at the place, you've arrived at the airport, and you went and booked a ticket for Abuja. That's you taking another setup. But that was not your plan. Your plan was to go to the airport, then book for Lagos. You understand? So I'm trying to relate these things. You know, I want to try and relate real life situation with trading so you can understand it perfectly. Trading is the same thing. You look for the levels, you know the place where the setup forms. You go there and you wait for the setup to form. You book the ticket and you just wait for the setup to form and play out and you take your trade. It's just the same thing. So for me, the most important thing I keep simple is where I expect my setup to form, like which levels, which PD arrays, which points, which zones will my best setup form. And then the second thing, which setups will I trade when price gets to my level? When I go to the airport, which flight ticket am I booking? Is it Lagos or Abuja? Since I had the plan on going to Lagos, that means I'm going to go there to go and book a Lagos flight ticket. So now you've gone to the airport, now price is literally in your level. Now what you're looking for is which setup. You had a plan already. Okay, beforehand, you don't just come there and start thinking of a setup. You know your setups. That is the only setup you are going to book. If the setup does not show up in that particular place, you go back, you go out, you log out, and you come back the next day. If you go to the airport and they say so and so flight to Lagos can't be initiated today, tomorrow you come back, you would go back and then come back to book your ticket for Lagos, or you wait a little bit. So when price gets to your level, look for the setup. A lot of traders, newbie traders, they have a whole lot of setup. They want to take trades using breaker block, they want to take trade using order block, they want to take trade using mitigation block, vacuum block, a whole lot of blocks in ICT Concept. We all want to take trade using all these things. Instead, just choose one concept, choose one setup. I prefer you choose one first, master one, gain confidence with one, then you can choose to add up 2, 3. The maximum I could tell you to do is just use 3 setups for your entry. Your entry is different from your directional bias or your levels. Your entry setups, you need to know what your entry setup is. Now, I'm not saying you should not know all ICT's concepts. You can learn all ICT's concepts, but you can use just those concepts, all those concepts to determine bias on the higher time frame. You use all those concepts, you try to relate with the other block keys, things like that, on the higher time frame just for directional bias. But when you come lower to your lower time frame, you want to be having a specific, just one PD array for your entry model. You get what I'm saying? So this trade, this place itself is a partial profit level. It's a partial profit level here, already here. This is a partial profit level. That zone, you're supposed to take your partial profit there and then lock your trade and then wait for it to fulfill its target. All right, so I'm going to explain this setup, this trade entry from top to bottom. So now this is the idea. What we are seeing here is the first thing that I got attracted to was here was the imbalance, and the second thing was this was previous day low. These are the levels where most of the setups forms, you get me? Previous day low, previous day high, you get me? Liquidity areas like that, PD arrays like fair value gaps. So this fair value gap and this level here was the thing, you get me? So now this is the annotation. So marking this fair value gap already, if you mark this fair value gap, remember what I said, that if you have a fair value gap, a higher time frame fair value gap, if you have a higher time frame fair value gap, when price taps into that higher time frame fair value gap the first time, don't trust that. You understand me? Don't trust that. You get me? So expect that to be used as what? Liquidity to be run through then the main move. So exactly the same thing that happened here. So as you can see, the fair value gap was formed on Monday. The fair value gap was formed on Monday. And then what happened? Price tapped into that fair value gap on Tuesday. And then what happened? And then left a low. The low, that was the low of the day. The low of the day on Tuesday. That was the low of the day. So that's an additional confluence, because another place you could expect your setup to form again, let me change this, is liquidity areas. So this can be counted as previous, that should be previous day low. So previous day low, you always expect what? Price to come, grab previous day low, break market structure, then come back, tap into your any PD array here you want to use, and then the entry. So these two things happened, and that was additional confluence. The previous day low was right inside of the higher time frame PD array, saving as what? This, the liquidity area. That's what I basically used on this trade. This was the fair value gap on the 1 hour time frame. That's the fair value gap. That's what I saw. Then this previous day low, and then price did what? Came, grabbed the previous day low when during London session. So during London session, price grabbed the previous day low. So when price grabbed this previous day low inside this fair value gap, what did I mark out? I marked out previous day high. So that was the previous day high. And then going into the 15-minute time frame, what did I see after the grab of liquidity? What did I see? This is the break of market structure. You can move into the 5 minutes to see a clearer break of market structure. Change this to line chart. You can see that this is structure, and price did what? Came, broke it with an impulsive move. Remember, after a grab of liquidity, you always want price to grab with an impulsive move. You always want price to grab with an impulsive move. So after price cleared out this structure, with this impulsive move, this displacement, you understand me, it left behind a fair value gap on the 15-minute time frame. Let me take out this 1 hour fair value gap. So as you can see, this is the 15-minute time frame, and that was where the entry was made. So if you can spot a fair value gap on the 15-minute time frame, there is no need for you to go lower to 5-minute time frame. You get me? There is no need for you to go lower to 5-minute time frame to look for a fair value gap. This is enough. And another hack that I want to show you guys, remember, the logic is to always place your SL on the first candle that formed the fair value gap. This is the first candle, second candle, and the third candle. But see what happened here. Price literally witched through that candle. So in this case, what I did was, what I always do after a series of back testing, I've seen that price literally respects structure more than this first candle. So you want to be using structure when the first candle is closer to the end structure, not when the first candle is very, very far away from the end structure. When the end structure like this is closer to the first candlesticks, you want to keep your SL below that structure. So as you can see, this was the SL in pips. This is the SL in pips, about 11 pips. It was just 11 pips. You get me? It was just 11 pips. So that was the beautiful entry that I saw there on AUDUSD. And now the concept of POWER-3. Remember the concept of POWER-3 also. This P3 that you're seeing here is the concept of POWER-3. Accumulation, manipulation, distribution. What does it mean? I'm giving you guys a whole lot of info right here. This is accumulation. This is just a simple concept of POWER-3. Accumulation, manipulation, and distribution. This is how the market makers move. Accumulation, manipulation, distribution. Right below the open, right below the open of the day. Let me show you what I mean. So this candle here, if you follow the time on your chart, UTC -4 New York time, and then you mark this, you mark this out, you mark the candlestick that opened. Look at here, 0.00. This New York midnight open. The candlestick open, you want to mark that out and extend it to time. So what do you want to do? You want to always, if you're a buyer, you want to be looking for your opportunities below this open. And if you're a seller, you want to be looking for opportunities above the POWER-3 line. You get me? So what did I say the POWER-3 was? Accumulation, manipulation, distribution. So where is the accumulation right here? Where is the accumulation right here? It's always the Asian session accumulation. You can see this consolidation in here. Now what? Manipulation, and then what? Distribution. So it's inside the distribution leg below the POWER-3 that your setup will always form for you to take price higher. You get me? And now what do you target? What do you target? Obviously, as you can see, this period separator separates the days. This is Tuesday and this is end of Tuesday. This is Wednesday. This is Wednesday is beginning. And what was the high of Tuesday? Here is the high of Tuesday. So this is the previous day high. This is the liquidity I'm targeting. So from here down to here is where I'm taking this trade to. You get me? From here down to here. But you'll be taking partial profit along the line. You'll be taking partial profit. One way to take your partial profit is to measure the range you are trading in. Just measure the range with your Fibonacci tool. And above 50% level, if you see any PD array like fair value gaps like this, you want to be taking partial profit too. And also here, partial profit, then allow it to run. You get me? So that is just the trade review for AUDUSD. And I'm going to review EURUSD. I'm going to review this trade that I took during London session, EURUSD as well. I hope you guys are still following. You are hearing me and my sound is clearer, much clearer. Now, this is EURUSD. It's a very simple trade. See the same logic. You will see. Just pay attention. You will see it's the same logic. First, let's start with the POWER-3. This is where it opened. This is where it opened. And below here, since I was a buyer, I wanted to buy below POWER-3, below here. So it's always what? Accumulation, manipulation, distribution. So this is the accumulation. Basically, I used the Asian low from here. If I mark out here, that was the liquidity point I was looking at. From here to here is Asia. So from here, this liquidity here, this low here is very significant. You get me? That's a very significant low where your setup will form. Remember, I said the most important thing is you're supposed to look out for in trading is one, where your setup will form. Know where your setup will form and you will stop rushing into trade. And this will help cure your FOMO. Once you know where your setup forms, so I know that my setup forms around liquidity areas like Asian low, previous session lows. When Asian low was grabbed, you get me? Asian low was grabbed. Okay, that was a beautiful thing, and it went below POWER-3. I started looking for buy setups. Did I have a buy setup? Obviously, bro. Obviously, I had a buy setup. This alone, this is an internal range liquidity. So once the internal, I saw this graph. Remember, it's a storyline first, liquidity grab first, liquidity grab, then impulsive move, breaking market structure, leaving behind fair value gap. So if you go down to 5 minutes, the structure break might not be clearer on 15 minutes, so you can always go lower. So this is the structure break. If you convert it to line chart, you can see here, so price broke how many structures? Price broke like how many structures? So with an impulsive move, you can get me. So with an impulsive move, and then remember the fair value gap was on the 15 minutes. Once you see a fair value gap on 15 minutes, from 15 minutes, not 1 hour, just from 15 minutes, 5 minutes, 3 minutes, 4 minutes, take it down like that. So it broke market structure, grabbed liquidity, impulsive move, and left behind a fair value gap. Let me change this so it's much clearer. So the candlestick high and this candlestick low, the space, the gap in between that is the fair value gap. The gap in between that is the fair value gap. And what the price did, price left behind the fair value gap, breaking market structure here. And then price did what? Came back, wicked there, nice rejection there, and then price did what? Went to do what? Where is the target? The target liquidity or external PDR raise. So if I can mark here, this is Tuesday's open and this is Wednesday open. So in here was the activities on Tuesday. So this is the high of Tuesday, previous day high. This is the trade that I took on Euro, and this is just the two trades that I took today.